Reports emerging from international media suggest that President Donald Trump has privately and publicly signaled a possible move to delay or block the formal opening of a major U.S.-Canada cross-border bridge, citing unresolved trade and regulatory disputes with Ottawa. While no formal executive order has been issued, the statements have already introduced uncertainty into one of the most integrated bilateral economic relationships in the world. The bridge in question is a critical piece of North American infrastructure designed to ease congestion, strengthen supply chains, and modernize cross-border trade between the United States and Canada. It connects two industrial regions that together account for a significant share of automotive production, advanced manufacturing, and logistics flows across the continent. Its opening has been anticipated by businesses, regional governments, and trade officials on both sides of the border. According to officials familiar with the matter, the White House views the bridge not only as infrastructure, but as leverage in broader negotiations over trade balances, industrial subsidies, and regulatory alignment. President Trump has repeatedly emphasized that major infrastructure assets should serve what he defines as American economic priorities, particularly in sectors sensitive to competition from foreign producers. U.S.-Canada trade exceeds hundreds of billions of dollars annually, making Canada one of Washington's largest and most stable trading partners. Supply chains in automotive manufacturing, energy, agriculture, and critical minerals operate on a just-in-time basis, with components crossing the border multiple times before final assembly. Any disruption, even symbolic, carries economic and political implications. Canadian officials have responded cautiously, emphasizing that the bridge is a jointly planned project governed by existing bilateral agreements. Ottawa has so far avoided direct confrontation, instead signaling confidence that the opening will proceed as scheduled under established legal frameworks. Privately, however, Canadian policymakers are assessing potential responses should the delay become formal policy. From a geopolitical perspective, the situation underscores a broader shift in how infrastructure is increasingly used as a strategic tool rather than a purely economic one. In recent years, major economies have tied ports, pipelines, data cables, and transportation corridors to national security and industrial policy. The reported threat to delay the bridge fits within this wider pattern. Market analysts note that even limited uncertainty can affect investor confidence in cross-border logistics hubs. Regional manufacturing centers rely on predictable transit times and regulatory stability. Any perception that political decisions could interfere with infrastructure operations introduces risk premiums that may alter long-term investment planning. The issue also resonates beyond North America. U.S.-Canada relations are often viewed internationally as a benchmark for stable, rules-based economic cooperation. A public dispute over a major shared infrastructure project could be interpreted by allies and competitors alike as a signal of growing transactionalism in U.S. economic diplomacy. At this stage, the situation remains fluid. No formal decision has been announced, and both governments continue to communicate through diplomatic and technical channels. The coming days are expected to clarify whether the reported threat translates into concrete action or remains a negotiating signal within broader trade discussions. What is clear is that infrastructure, trade, and geopolitics are increasingly intertwined. The outcome of this dispute will be closely watched, not only in Washington and Ottawa, but across global markets that depend on the stability of North American trade corridors.